Okay, welcome everybody to the Pipnotic Symposium for the 9th of November 2017. Today we're going to have a look at, run over a few pairs and answer a couple of questions. Something I've been doing over the course of the past, or maybe half a year, is I've been spending a lot of time looking at these cryptocurrencies. They seem to be doing a lot of incredible things, and the software of course can be used for cryptocurrencies as well. And you can see very clearly, if we have a look here at Bitcoin, the American dollar, you can see it's done nothing but go up. I mean, look at that. That's it's like an exponential push higher. It's really a crazy parabolic move. So there's a lot of interest in buying these cryptocurrencies, which is great. Another one that's very popular is the Litecoin, which is this one here, and there's also Neo here, and a few others. One of the ones, this is the one here that I have been focusing on. I think this is a really interesting coin for, the main reason being that a lot of the Asian banks have invested enormous amounts of resources in the technology behind XRP, which is Ripple. This is also called the Ripple coin. And so, UBS in Switzerland, some of the major banks in Japan and in China are very interested in precisely this cryptocurrency. And so I bought about maybe 3,000 of these coins. And I'm just going to hold these, I think, for the course of at least a while. And I got in like around here, just down here. And I'm going to hold these for a while because I think that there's enormous potential on that. And if you consider where Bitcoin is now compared to the price of this, for example, which is about 20 cents. It's not even, I think it's like, let me look at my telephone. For the American dollar, I think you pay 22 cents for one of these, and so there's enormous potential to really buy like a nice position and hold it for an extended period of time. Heidi's asking, what do you think of Golem? I don't know a lot about Golem. I've been looking at, I've just started kind of trying to figure out a way to assess the value of a cryptocurrency, because they're very difficult. And if you consider, for example, a currency, you can't really evaluate a currency because, it's a currency. You can value a company, of course, but currencies are very difficult to value. There's supply and demand, and as long as people are buying, then the value of it's going to keep going up. But I'm going to look a lot more into these cryptocurrencies because I think they are really, really fascinating. Yeah, well, what's the dev team? I'll definitely have to. I think it's a really exciting thing here. Okay, cool. The guys who wrote it, yeah, of course, good. Well, a lot of these guys, they put the code in like Git repository, so you can check it out and read the code, which I really like. And so it's nice to be able to kind of get in and have a look around and see how many. Also, you want to make sure that there's a lot of activity, so they're checking the code in a lot and checking it out a lot. So there's a lot of activity. This, of course, confirms that there is an interest in developing and maintaining the code. If you have a code that's been checked out. Checked in and it's been kind of sitting there for half a year. This is kind of not such a good sign. You want to see a lot of activity in the code base. There's actually a coin offering at the moment. It's called AUDUSD, I think it's called. And I think they're about 85% funded, and they're closing it funding on I think it's the 20th of this month. So that's also something I've been looking. I just use a software wallet like a Bitstamp. I'm not doing anything terribly secure there, but I've looked at some of the hardware wallets, but yeah, I don't know. I have to kind of look a little bit more into it. I've mostly been kind of looking at price charts because this is something that I think is interesting, because supply and demand is pretty much in everything. And so this is where I've been spending a lot of my time in regards to these cryptocurrencies, and you can see how they respect these areas very nicely. So if we can just have a quick look at Bitcoin and see if we can see what's going on. Well, of course, it's never been this high before. You go to the monthly chart, it's up. I mean, there's everything is up. So you have to go, I think, down to the weekly so we can draw an upward sloping trend line. And this trend line stuff will make sense in a second because I'm going to walk through the process of performing an analysis here. But you can see we have an upward sloping trend line. Here, you go to the daily chart. Let me adjust that. So you want to go like that. And the reason we draw like this is because we have a low here, the first low. We have a high. We have the second low. And when price left here, it moved above here. So this just gives us the ability to connect these two lows. And you don't want to, you have to be a little bit careful because you want to take significant swings. And this is significant because when price left here, we took the most recent swing high out here, so price left. So this is an important point here because this, of course, is where price ultimately drifted higher. And this is just a very visual, clear swing point, like so. So it looks like this, super simple, like that. So we have 1, 2, we have the high until we draw the trend line like so. And this is good because because you want to be able to assess a trend. And a trend is where you have demand being respected and supply being consumed by the opposing demand. And here we have demand being respected. You can see you want to focus on these rectangles. Are these rectangles below or are they above price? So they're clearly below price here. So we have a price sensitive area here, we have another one here, and we have some, of course, below price. And these are going to be micro demand here because there's very low liquidity down here, hence the low trading activity just here. But I really like this one because when price left here, I mean, this is just a beautiful release, and this is the area of demand that moved price above this high. So I really like this one here. And if price comes back down to here, which is, it's really low, it's really low, then I think it would be a really good place to buy. But these things don't seem to be pulling back at all. And so you have to be a little bit mindful of that. So if we have a look here, you can see that we have the same thing going on the 4-hour chart, how we have price kind of wriggling high, we have the rectangles below price. We go to the hourly chart, you can see that price looks like it's having a bit of a breather. We had this area of demand that was respected once, twice. So on the third time, I mean, not really expecting this to hold again, which brings us to this area here, which looks okay. So we have this one here. We're going to have a look at these in detail in just a second. Then we have this one here, which is kind of a long one. We'll mark it off anyway. It's not super attractive, simply just by the way it's structured. And we have this one here, which I like. So if we get those to draw, then we have these ones here. So we go up to the bigger time frame and have a look. Yeah, I mean, these are very clearly decent. I like this one. Yeah, these all look pretty good, these two here. This one is nice. This one is nice because this is where we had a low, high accumulation, and then price kind of moved up like this. So I really like these ones here that we have marked up. We also have the big figure up here, the 6,400 area. So I mean, this would be a logical place to look to buy should Bitcoin have a bit of a retracement. But it's absolutely crazy the way things are going here. We have a look at XRP. We have a look on the daily chart. We have a lot of interesting stuff going on. Here we have a really nice area here. This is just a huge release. I mean, price rallied, accumulated, then just gapped up. I mean, price could not, order filling could not keep up. So there were liquidity issues causing price to move up higher. So there's probably some pretty massive spreads as price raced up during this week, 2 weeks. I mean, look at that. That's absolutely amazing. I think this is when there was a mention of these big cooperations with some of these major banks. This is kind of where this information was introduced to the market, and you can see the result of that. So price is wriggling higher from there, and then we kind of slowed down a little bit. No new news. Price came down to the low, and now we're kind of wriggling higher from there. But you can see we're kind of forming this nice base here. And I'm expecting price to, on the longer term, wriggle higher from from here. We don't know where, of course, but as long as these big banks are showing interest in Ripple and XRP, then I think there's just going to be a continued a tendency to buy this cryptocurrency and hold on to it for for a couple of years, because I think this could be something that'll mature very nicely. Yeah, and there's Ethereum, which looks like this. I like this because we have this area of supply. Isn't this funny how an instrument as, I suppose, relatively illiquid as a cryptocurrency, well, they used to be illiquid, now they're becoming more and more liquid, but how they respect these supply and demand rules. We have this really nice area here, price rallied, we accumulated for one period and then we moved off. When we left here, we managed to take out this area of demand, this area of demand. We had one test, two tests on this one here, and then price came down to this one just here. And so this is just a really nice area here. So this was a logical place to sell when price came up. I just had a really nice reaction up there. And so once price manages to move above this high, then we can draw our upward sloping trend line. Then technically we have a daily uptrend, which we actually already have now, because we can mark off this low to this low. This is this kind of bleeding edge price here. We had a look at the monthly, not really anything going on. The weekly, I mean, it looks pretty interesting, but we still can't really do anything. But we do on the weekly have this really nice push higher, and it all originated from down here. So this is a really nice place to buy should price come back there, but things don't seem to be pulling back at all for the time being. Yeah, very wedgy. Things are kind of getting squeezed, as you can see. So things are going like this, which means that kind of price is kind of wriggling into a tighter range, and then it'll either pop higher or lower. And when you have kind of a flagpole like this with the flag on it like that, price normally pops higher. So I mean, we can expect that price is probably going to wriggle higher from here. Just I mean, this whole cryptocurrency fad is really pretty crazy at the moment. Are any of you guys investing in cryptocurrencies? Yes, nice, Heidi. What are you into? Bitcoin, ETH, and Litecoin. Okay, cool. Yeah, good. Also you. Okay, cool. Nice, nice. Yeah, there's a lot of really interesting stuff there. I mean, you read these stories of these like 12,000% returns over, I don't know, like 8 months. It's just completely staggering. Completely staggering. Anyway, we'll leave the cryptocurrencies. We're going to be doing more and more of these, and I'm going to be doing some like quantitative analysis in my Jupyter notebook with Python in the future, because I think this is just a really cool market that we're going to want to spend a little bit more time with. You got Bitcoin at 24, really cool, very, very nicely done. Good girl, that's awesome. Cool. Let's go to these charts. I mean, there's a lot of new members these days, so I'm just going to go through like the basic kind of method of identifying a trend and identifying these areas of supply and demand, and then we're going to move on from there. Okay, so I mean, first of all, if we have a look here, you know what, I'm going to start from scratch. I'm going to grab the Aussie dollar, and we're going to do a top-down analysis. I'm a longer-term trader, so I'll show you how I do it, but then afterwards we're going to go to the small time frame and do the same thing intraday. So what I like to do is I like to go to the monthly chart. I want to see as far back as possible so I can see where all this major supply and demand is, and I can see what's driving price. And I want to be able to answer that question: what is currently driving price? That is really important for me to assess. And the way you do this is you go to the highest time frame possible, and then you ask yourself what has been established most recently. If you've got the indicator, you can turn it on, and then it'll tell you. But we'll do that with the software, and then afterwards we're going to turn it off so we're not cheating, and then we'll have to do this by hand. So if you turn it on, yeah, you can see very clearly that we have this area of monthly demand that is moving the Australian dollar, American dollar. And what does that mean? Well, that means that there was when this area was established, which it was on the close of this candle, then there was a bullish sentiment on the monthly chart, because the most recent area of supply and demand that was established is this one here. So this is actually what is currently driving price. So we can see this is currently driving price. Additionally, we can draw an upward sloping trend line, which is connecting, in this case, demand, which looks like that. So we have a technical uptrend. We have a low, we have a high, we have a higher low, and price moved above the most previous swing high, which is this one here. So we have a technical uptrend on the monthly chart. Then you go to the smaller time frame. We'll clean these up here, and we do the same thing again here. You can see that we have this area of demand. It's being tested, and this one lines up pretty nicely with this area, this upward sloping monthly trend line. And so here you can see, taking the information from the monthly chart down to the weekly chart, we'll just draw this on here, like so, like that. So we have that when we go down here. You can see this is that area of demand. This is what I'm targeting for long here, and we're expecting price to come down here eventually and continue higher. So we have an upward sloping trend line on the monthly. On the weekly, we have what appears to be, you could use the same one, because this is the most recent, very clear swing point. Here we have a low, high, but you want to pay attention to bleeding edge price. We have a high, we have a low, we have a high, then we have a low. So you could do this like so. And this is great, because now what we want to do is we want to see price cause market structure to fail. And why is that important? Well, we qualify supply and demand in 3 different ways. One of them we won't focus on today, but the other 2 we will. The first one is we want to see an area of supply and demand cause market structure to fail. And for market structure, we normally use trend lines or these channels. I like trend lines because then you only have to find the tops or the bottoms to line them up to. Or you want to see an area of supply and demand opposing supply and demand. And so you can see we have a little X here. This used to be supply. This area of demand consumed it. So when price moved above this most previous swing high, that qualified this area of demand as demand. And so going back to our trend line, we have a downward sloping trend line. So what we want to happen now is we want price to accumulate here. We have one period of accumulation. It looks like we're setting up for another period of accumulation. Then we want price to break above this trend line. And when this happens, we want price to break above this trend line and preferably consume opposing, in this case, supply. And then that will enable us to qualify this area of demand as demand on the weekly chart. And when that happens, then we have our weekly demand here. We have our monthly demand here. And that's great, because then we know we have a bias. We have our entry to buy here, which would be a really nice place to buy, because we know that we're reacting on this weekly, this parent demand here. Here we have a child. This is a child because it is a reaction to this one here. But this child here was actually the one, if we pretend, of course, that this trend line has been broken, when price closes above it, then this has been qualified. So this is when we start buying. Now you want to continue to buy. We know we have monthly demand controlling price, so we want to be buying, and then we buy on weekly or daily demand. So we don't want to be selling this. You go to the daily chart, and this is when you refine your entry, and you can see the price is accumulating here. It looks like it's going to try and do something. This could actually be our daily trend line as well. So if we go like that, I'm just going to change the name so that the indicator grabs it. And the indicator color codes everything. I'm just going to have to draw this one from scratch. Color codes everything, so I know that this one's going to turn red in a second. So that tells me that this is a daily trend line. I know this is purple. So this is a monthly trend line, and this is all in here you can see. So we have a monthly, weekly, daily, 4 hour, 1 hour, and so on and so forth. So when I see these different colors, I know exactly on what time frame they were qualified. And so this is a really interesting for us, a nice one for us. Ideally, I'd like it to come back down to here to completely rebalance this price imbalance here. And when that happens, then I'm definitely looking to buy, because it'll also line up nicely with this upward sloping trend line. But you can see we had this area of demand, which is nice and valid and qualified. It was tested once, twice, and then price managed to break down. The point of origin for the area of supply that broke the trend line is up here. So you move this up to here, and this is the one that did it. So this is important, this one here. So we want to keep our eye on that, because this is going to be a logical place for us to consider to get out of this trade, because this is opposing qualified supply. So assuming that this holds, then we're going to want to make sure that we get out of here. And so here this is important, because opposing supply, in this case supply, has to be far enough away from my entry that we can have a good risk reward. So assuming that we get in, let's just assume for hypothetically that our area looks like that. And so we want to have at least a 3-to-1 here. So we look at this, we have 87 pips, we have 90 pips. So you want the entry to the target to be at least 3 times that, so 270, which is exactly, well, it's pretty much 270. And so this would be a really nice area to buy at for that reason, because we have room for the trade to work out here. We have monthly demand driving price, and so that would be a really nice place excuse me, to get out of this trade should we get filled down here. Cool. Okay, so we're going to do another pair. Does that make sense? Is that super clear, or is it like lurky and not clear at all? Yep, is cool. All right. Is there anything you guys are struggling with in regards to supply and demand? Is there like some of the fundamental concepts you're having a trouble with? Or I know some of you might be looking at the smaller time frames, and that works as well. But you have to be a little bit more careful in the small time frames, because intraday volatility and news and stuff like that. When I'm on the monthly chart and the weekly chart, I don't even look at the news. I don't care, because I know if price comes down to here, or comes up to here, or comes up to maybe the tops of these wicks here, I know that there's going to be a lot of willing sellers up and around that area there. I normally enter trades on the daily or the 4-hour. Okay, we're on the daily here. You can see we have a really big wick. I mark this area off here. Because the wick is so big, I'll go to a smaller time frame, because that big wick is telling us that we have micro supply located in that wick. So I'm going to go to the 4-hour, and I am going to find the area inside that's interesting. And you can see it it leaps out at us here. You can see that we have the green candle to the left. So if you look, first of all, you look for the green candle that left the area of accumulation, and we have this candle here, which we consider to be accumulation, simply because it's kind of a small candle with a small body. And then you look for the candle that left. It managed to close below the lowest, below the low of that candle. So you can actually go like this. And so I'd actually go to a small time frame here. So we've reduced our pip risk, by quite a lot, by half the size. Would actually reduce it by almost 50% in order to go back onto this one up here. And so what I do then is I'll mark off the high like so, and then I'll ask myself, is this a parent or is this a child? What does that even mean? Well, the parent and child supply and demand simply tells me that there is a relationship between supply and demand. And so this is actually a child supply, because this is the parent. This is the parent, and this is a child. A child supply or demand is supply and demand that is established as a result of the existence of a parent, which is this one up here. So this is the real supply, and this is the reaction to supply. It doesn't mean that this one isn't going to hold. It just means that the better one is up here. But you always focus on the area of supply or demand that is closest to price, which is currently this one here. Well, we also have this one down here as well, but if we could focus on this, and this is the one that we're going to be looking at here. Okay, Heidi's saying, when you say monthly demand is driving the price, on which time frame is it driving it, or just the one below, the daily? When I say monthly is driving it, then I mean that the monthly demand is driving, like this area of demand is currently driving price. This price movement is caused by demand located in this area, which is monthly demand. And so this is why you want to go on the highest time frame possible that your charting platform provides for you to find out who is driving price. Do we have the buyers or the sellers in charge? And here we have the buyers in charge. So you take this information with you when you move down to the smaller time frames, because then you know you are going to be trading in line with the major institutional flows, which is to buy the Australian dollar, American dollar. But you can see that, I mean, price is going to move down here at some stage. We were having a bit of a reaction, but at some point price will probably come back down here. And so there's, of course, plenty of room for shorts on the way down here. As I mentioned, I like the higher time frames, so this is where I go. But you can do the same thing, of course, in the smaller time frames. And let's just do that, for example. So if we go here, let's say that you want to trade in line with the daily. So your daily chart is your trend time frame, is your long term, the 4 hours, your medium term, and your entry time frame is the 1 hour. So you do the same thing here. You mark off your trend lines. So we have a high, low, high, low. So we can mark from here to here. So we have a very clear daily downtrend. We mark off these areas. This is kind of messy. I don't like that so much, but I like this one here. And we saw that area up here. We'll just say it looks something like that, roughly. So we have those two. And the reason I don't like this is because this is really important, because you need to find a level in price where price has not been back to. If we look at this, and I mark that off, and you ask yourself a really important question, has price been back to this level before? You can answer, yes, it has. And where did price get back to that level? Well, the price came as far back as this level. When price left supply, you have to think about it came back, and when it comes back, it's consuming liquidity. So it's thinning out the market, it's thinning out, it's filling bearish limit orders up to around this area. So for this, for the Aussie US dollar, you don't want to be selling for a price any cheaper than the 7,900 area. So the sell zone starts at the 7,900 area, and it goes up to the high of the area of supply, which is at the 79.86. The ideal entry would be here, right here, because we have the accumulation, and the cutaway candle. So price tested the area, we didn't manage to close, and this one closed. So we had a huge influx of sell orders enter the market at roughly this area. So the 79.26 is the cutting point for this. And so this is not an area. You mean price will come there, and I bet you there's a 90% chance that it's going to give us a bounce there. But if you want to enter trades, you don't have to babysit, then you're going to want to wait for this area here, which is fresh and untainted. And I always refer to these as plates of pancakes, and I'll draw what that means. So we have every area of supply and demand I discuss as being like a plate. So on the plate we have pancakes like this. These are pancakes. And so every time price feeds into this area of supply, these stack of pancakes, it's going to always take the one that's on top of the stack. So once price feeds into that area, that pancake is gone. And so next time price comes, it's going to have to go a little bit deeper to get the next pancake. And these pancakes are simply pools of liquidity or limit orders to sell. So when price comes up there and it consumes this pocket of liquidity, then it's going to have to go higher next time to get the next one. And so this is like price comes up, it comes down. So we find liquidity, it comes up, and it comes down. The next time it's probably going to go to the next one, so the fork has to go a little bit deeper, like that. And the price is going to continue going up like so. And it'll keep doing that until it runs out of supply, or pancakes, which it'll do once it comes to the top here. And then normally test the very, very high, maybe even go a little bit higher than that, because that is where like some really extreme areas to sell at will be located, and then it'll turn around. And if you consider for a second liquidity, it's super important. I mean, if we have liquidity here, and we have price. So we have price, and we have liquidity. And so we have high liquidity, low liquidity, high liquidity. So this is current price. So when price is moving back and forth here, it can do so really easily because there's low liquidity. The buy orders consume opposing liquidity, sell orders consume opposing liquidity, but once they reach to the extremes, I'm referring to this as an extreme. This is maybe around here, for example, and this this area down here is maybe here. Then there's going to be a lot of people looking to buy and to sell at these areas because this is a really good value. This is a really good price to pay for that. You have to consider anything that you trade like a commodity. So you have something, and I mean, who wants to pay a price that's too high? If you have a television or you have a bicycle, does it make sense to wait until the price of that bicycle, yeah, I'll just do it super easy, is really expensive? Do you want to pay this price up here, or do you want to pay this price down here? Obviously, you want to pay televisions, you want to buy televisions and bicycles for the lowest price possible, which is down here. So you have to think that the lower price goes, the more interest there will be in buying televisions, bicycles, or currency pairs. And so you just have to, it's just such a good idea to focus on the tops, on the bottoms, no matter what time frame they are. This is better, but this is not a top, is it? This is a swing high, but it's not a top. This is the top. This is a major top, and this is a major bottom. But everything is fractal. This is what my mentor always said to me. He said, "Sareed, price is fractal." And I was like, "What the hell does that mean?" He said, "Well, whatever you see on the small time frames, you will also see on the high time frames. So it doesn't matter what time frame you are, you're going to see very similar, if not identical, price patterns." And it's true. And while this looks like a major high on this chart, on the monthly, maybe this one looks like that. So it becomes not a major swing high, but it becomes actually a minor swing high. And so this is just also something very important you have to be aware of, which is why you should always refer to the higher time frame, just so you know where you are in relation to this and this. The major money, this is like mucho dinero on both sides here. There's people looking to buy and to sell enormous quantities on these very extreme levels on these big time frames. So try and take this information with you when you go down to the smaller time frames. Where is price now in relation to the major supply and demand? When I say major, I'm of course referring to the greater period supply and demand. Let me remove all these fancy drawings. Yes, the wicks are maple syrup. Indeed they are. The good stuff. Okay, Heidi is saying the Aussie is about halfway in between the top and the bottom. It is. It certainly is. Let's have a look at that. So you can see that, let's assume for a second that we're not paying attention to the weekly or the monthly, but we're doing the daily 4 hour and the 1 hour. So here you could also look for your major, like the major market structure, which would be like here we have like a major low, we have a high, we have a low, and then we have a high. And so this lines up very nicely with this. And you can see that we actually have, this, and we have this one here. This is not supply, demand, this is a reaction to demand, which is down here. And then below that we have this one here. And I'll tell you in a second why I drew it like that, why I didn't take the high of the candle body. But you have this one here, which has not been tested yet. And so this is the 7600 area. This one is less probability. Why? Because it's been tested already. And so price will have an easier time moving through this than it will this or this. Price has not been back to this level before. You can see since the rectangle has been drawn, there's only black space. This one's drawn, Oh, price dipped into it. Price left here. And you can see it came back into it. This one here, it was established. It moved away from everything, has not been back. There's no test. Now we're starting to test. So you can see this is the picture of orders being filled here. How price comes down, jumps, comes down, jumps. And so this looks to me like we're filling orders to go maybe to try and move higher. So we're accumulating what I think would likely be buy orders. So we're going to move down into this area around here. We're going to find the liquidity required to overwhelm the sellers. We're going to accumulate long orders and then drift higher. Yeah, so I think that's definitely what's going on there. And so, yes, so you can see that on the daily chart, if we look at this, let's say we're not paying attention to this, and you see like, oh well, we're in a downtrend. So you want to position yourself short. So you look at this, okay, we're in a downtrend, so we want to be selling. So you go to the smaller time frames, and you want to try and find somewhere to sell. But can't you see now that that becomes all of a sudden a little bit dangerous, knowing what we know from the monthly and the weekly? Because now we know that actually we have monthly buying, we have weekly buying, and on the daily we're just having a really nice big pullback. So wouldn't that make you feel a little bit less comfortable selling here or wherever now? It really would make me feel a little bit more uncomfortable. So what you would do is you would wait. You would start measuring sentiment using trend lines. So we have a high to the low, and you'd want to see what's going to happen. Okay, are these trend lines, are they going to break or are they going to hold? So you've got another one here to here. You mark them off and you wait and see. You can see that we had this trend line. This trend line, we had a low, high, low, high, and it broke. What area of did it? It's this one here. So here we have a valid supply. When price left here, it went below this one, so that makes that one valid. So now we have that. So we have 4-hour supply currently holding a price. We have this one. We have a trend line that's broken now, almost, not quite. We have a high, low, high, low. Price is sitting just on it now. We have this area of supply just opposite the 7,700 area. So before you do anything, you want to wait and see what's going on in these smaller time frames. So you can see very clearly that, I mean, price is, you can see that this is not an ideal place to sell. At the moment, we do have this blank space since it was established. The trend lines are starting to be broken. You can see that price is trying to break bearish market structure. So we go from being in a downtrend, a technical downtrend, to be in a bearish consolidation, which means that we are no longer in a downtrend. We're having a breather from a downtrend. And if price starts to turn around, if we have a low, we have a high, we have a clear swing low, and then price breaks above and comes up to here, well, then you can't sell anymore because you have a 4-hour uptrend. And so focusing on the way price reacts to these very clear trend lines really gives you a lot of insight as to where the sentiment is. So on the monthly, you can see the major order flows. Using trend lines on the small time frame, you can see where the sentiment, what the sentiment is, and you can see that, I mean, it's not really ripe for selling just yet. I mean, you could have a sell here, but if you look at this, you can see, well, has price been back here? No, it hasn't. It's I mean, this looks pretty fresh, but we have this fresh area of supply here. So this one would, to me, be a little bit better because when price left here, it went below this one. So we have demand here. We have micro demand here. You can see it very clearly, like this. I draw it like this because it's established. This is micro. This is probably 1 hour. Established, price came back, tested it. Demand, reaction to demand. Rally, accumulated, rally, accumulated, rallied. Upward sloping trend line. It was broken. This area of supply caused it, and price is going down. And now this one has been taken out by what? By this one. So this is the natural area that we would want to target for a short. But I wouldn't touch it because why? Because we have the big money moving higher. So I'd want to position myself long on a really nice area of daily or 4-hour demand. We can see this very clearly, of course, on the daily chart, like we just saw 2 seconds ago. which is just down here. This is okay. This is quite a nice area. 1, 2, 3. We have 4 areas of accumulation, which is good. This doesn't look like an extended period of agreement. What you don't want to see is you don't want to see this. Is this an imbalance in supply and demand or a balance? It's a balance. There's agreement in supply and demand. So this is not interesting. There's no one selling or buying here. This is just price doing its thing. This is just price moving higher and lower, seeking liquidity, and that's it. There's nothing going on there. But when price drops down quickly, we accumulate for 4 periods and then we leave. Well, that tells us there's an imbalance at this level, which means that we have liquidity available to buy around this area, this rectangle or below. All right, cool. So that's kind of the basics. I kind of skimmed over a lot of it. I want to show this here. If you look at this, we have an accumulation candle and then price left. Notice I did not mark this area off like that, but I marked it off like that. That's because price rallied, accumulated, and then rallied, but when the rally, before the rally left, it came down and it pointed to the edge of the area of demand. So if we go down to the smaller time frame, maybe we'll go to the 1 hour, you'll see that, was that it? I don't even know where I am. Further along. Here. You can see it just here. How price rallied, we came up and we came down. So demand, a reaction to demand. And so if you put your entry here, well then price is probably going to go through it and go to the real demand, because this isn't a demand, this is the child and this is the parent. As a matter of fact, if you look at this, it isn't the parent. This is the parent. This is kind of, this one is a reaction to this one, and this one is a reaction to this one. So this is actually the only fresh area of demand here. And so doing this, it doesn't make sense because price has already been back to this level. It's already been back to this level. So this is the most logical place to buy, just here. If that makes sense. So it's pretty simple. You just have to look for where price moves to before it releases. This is a really cool area because price came down here. We sat in it for a long time. So you could argue there is indeed a balance in supply and demand here. Then price just cut away and we remove this area of opposing demand here. But on the 4-hour chart, it doesn't look like too bad. We have 1, 2, we have 3 periods of accumulation. Keep in mind we have big wicks. So you maybe going to want to go to the half-an-hour chart and have a look inside and see what's going on there. And we'll do that quickly. And you can see again, rally, accumulation, price leaves, it tests. So we actually mark it off like this. You go to the high of the highest test since the release, which is like that. And so this is supply. It's not even really nice supply. Price didn't even leave. You know, I wouldn't even touch this area. I'd maybe have a look at this one and wait for currency strength to show us that it's going to slow down in this area here. Yeah, so that's it. It's pretty clear, I think. Just using trend lines really to help you to identify areas of valid supply and demand. Is it clear? Is this how you guys are doing it today? I know most of you guys are working with Elijah, and yeah, cool, good, excellent. I know he does things maybe a little bit similar, but also quite different. When he's on the smaller time frames, you know, he's doing some pretty interesting stuff there, but he's just playing the whole liquidity game, just watching price wriggle between these small pockets of liquidity, both higher and lower. Oh, you do the top down as well. Good. I mean, I really, yeah. Whenever I take trades and I'm not doing the top down, I get stopped out, and it just, I mean, you get into fewer trades, but you know that the trades that you get in, they are much more interesting. Right. Okay, let's have a look at another one. We'll just take the, should we do another pair? Does anyone here have a pair you want to look at? The pound yen, okay. Yeah, apropos swaps, on the indicator, you see this is green here. That means that you want to be buying if you want to be trading in line with the yields of these two currencies in relation to one another. So green means buy, red means sell. It means you want to be selling if you want to position yourself short in relation to the yields. yeah, so that's a really nice way to ensure that you're getting some pretty nice. Yeah, if price is moving sideways, you're still earning a bit of money. Right, pound yen, pound yen here. So what's going on here? We'll do the top down. What's going on here? Well, you can see that, yeah, we have this area of supply here. It's going to go like that, which is a beauty. Really nice push. Sell-off accumulation, sell-off. Keep in mind, this is in the middle of the move. But if you look here at the bottom, you can see that price moved lower. We moved lower like this, and then we moved higher. So we actually have an area. We have one period of accumulation, and we have something going here, but there's nothing there. There's nothing interesting there. So currently, we have demand that is driving price, and we can actually draw a trend line as well. We take from the low here to somewhere around here, and then we also have this upward sloping trend line. It's not a very clear one, but you can see that it just defines a pretty clear uptrend from here. But when you look at this, you have to keep yourself. You have to note that the move has already happened. So from between opposing supply and demand, where are we? You can see we're pretty close to the supply. We're actually beginning to react to these wicks here. So these small patterns in these wicks here. So this would make me a little bit nervous to buy at the moment, because I know that we're starting to react to resistance here around the what's that level there? Let's have a look. The 152-ish area. So that would make me a little bit nervous about buying. And you can also see that price left here, but then we kind of wriggled sideways for a while. And this just shows that there's agreement in supply and demand here. Then we had an influx of buy orders, which would give me again a little bit more confidence, because we have the green candles are moving higher, not lower. And so I would feel more comfortable buying than I would selling, at least until price got a little bit deeper, maybe even as close as like up here, like the 15500 area. So take this information down to the weekly chart, and we see what's going on there. I'm just going to turn off this one. I've got a lot of pairs and charts open. Okay, so here you can see we have something similar going on. We have a low, high, low, high. So here we can draw an upward sloping trend line. Is that upward sloping? Maybe only just. Yeah, it is. Just only just. And then we have accumulation, rally, accumulation. And so we look at these closer. We have the green candle, and we have this one here. Is this accumulation candle? Yes. Is the body of this candle the range of the previous? Yes, it is. Is this accumulation? Kind of. Is the body of this in relation within the range of the previous? No, it isn't. So we actually have this like that. So that's what this area of demand would look like. So the 142.82, and this is nice because when price left here, we moved up above and into this. And what I like, all of a sudden, I like what I see here, because you can see this. We have supply. Where is the edge of this area of supply? It's right here. You can see right there, right here, where price tested on the way down. And so all of a sudden we do have room for a trade higher, because this is the first test, and each time price pokes up into the area, it's cleaning out liquidity. And so you could say that price liquidity is cleared out up until around the 159.80-ish area. So buying down here does not, it wouldn't scare me anymore. One thing I don't like is that if you look at this, has price been back to this level before? Yes, it has here. Has it been back here? Yes, it has. And so you can see that actually brings us down here. So this is kind of the only area that is really interesting, which we could of course see very clearly on the monthly chart. But I think for intradays you could probably see some reactions in here. Let's go to the daily chart and have a look, and you can see that it looks like we have this, which is nice. This is in the middle, this lower probability, because the closer you get to the top, the lower probability if you're buying, or the closer you get to the bottom if the price is moving down, the lower probability, of course, because this is kind of just in the middle. But what I do like is when price left here, we managed to move above these highs. So that's telling us that we have a lot of buying at this level. So you could totally take a stab at that around here. You're very likely going to get some reactions there. Let's move this like that. Trend line wise, what do we have? Nothing really. Let's see, we have to find the most, first of all, you want to draw the swing points. So we'll take here, I'll go like that. And so what do we have? Well, we actually have, we can't use these two because price has not left and moved below here. So these are no-goes for the time being. We have this one and this one which we could use. But another thing you can notice is that, oops, clear. We do have this and this, which is a downward sloping trend line. Not a beauty because it's a little bit too close. You can see that we don't have any closes below these lows here. So ideally you don't want to see like something like this leaving, consuming this demand, but we don't really have that yet. So this is kind of like an unqualified line for the time being. So we look like that, but ideally you want it to move down. And then keeping in mind that we have a bias long, you could consider buying this. So price comes back, if price comes down here, I'll show you what you want to look for. So price goes like this from here to here. Probably have a couple of wriggles and then move down here. Maybe it'll test this and then break the trend line, which will qualify this as demand. And then you buy on the test and follow it higher from there. So that's something you could potentially see on the pound yen here at the 146.27-ish area. So I think that looks pretty easy, pretty interesting. I like this one very much. This is a really nice one. Price rallied, we accumulated for one period, which means there's a very strong imbalance in supply and demand. And then we moved higher than all of this stuff over here, which I like very much. So that's probably this is probably going to be pretty nice. Cool. Let me delete all these. Cool. Super. Cool. Any other questions? Any of you guys using like the currency strength software? I'm actually going to reintroduce. Let me find it here. Got a lot of. Okay, here. So I got the currency strength. I've got this one that I'm going to reintroduce. Where is it? Here it is, the GFX. I'll take the dev version. I'll just turn that on. And what this is, it's a pretty awesome tool because it's showing you what's going on in with these currencies graphically, very clearly. So you can see here that, I mean, this is Kiwi. The reason it's brown is because in New Zealand, they have a lot of cows. Cows live in fields. Fields are made of soil and grass. Soil is brown. Yeah, and so we have, yeah, it's the greenback, the European is this one here, and then there are a couple of other ones that kind of stick out like, yeah, like magenta for Canada. I don't know, that's kind of like the one I had left. But what you can do is, if you like to do short-term trading, then you can do something like this, where you've put this on the 1 minute, sorry, you go static periods. Anyway, this hasn't come out yet. I'll put all of these tutorials up when I get this. And here we go, like, so looking at 4 hours of 1 minute price data. And then here you can see what's been going. You can see that the pound, let's see, okay, let's just wait for this stuff to load here. It's downloading like crazy, I can see. It's downloading. So now you can see today we have the Kiwi that was strong, and we have the okay, it's not done just yet. Let me flick through some charts. It's doing some serious number crunching. Okay, so we have this one here, green, which is the greenback, the American dollar, which is the weakest one. And we have the Kiwi and the Canadian, which are the strongest ones. And this is a zero line. So ideally, you want to be buying currencies that are up here, and you want to be selling currencies that are down here. So if you are uncomfortable doing your supply and demand analysis, you can cheat, and you can look at the currency strength information, because it's giving you a really good indication of what's being bought and what's being sold. When I wanted to trade full-time because I thought that would be the answer to all my problems, and so I quit my job, which I don't recommend. I sat home for 10 hours every day trading currency strength at the London Open, and it was both a horrifying situation to be in, but also a very beneficial in that I learned a ton. I don't recommend to do it because it sucks having putting that much pressure on yourself. We almost lost our home, blah blah blah. So I don't recommend doing that. When I look back now, this was a few years ago, I wouldn't have done the same thing. But at the same time, I did have time to study price a great detail. But what I was doing at the London Open is I was looking at the way price is moving at the open of given sessions. And so you can tell the indicator, say, okay, I want to look back to be the session open, and then it's going to look at it's going to compare currency strength now to currency strength when the session, this most previous session, open. So if I go like that, it's looking at the Asian session. So the Asian session, maybe I've got my time wrong, but the Asian session is maybe opening. I can't even see. I think I have my GMT times wrong here. Let's have a look here. Yeah, so I think Japan, Tokyo is just starting to open up now. And so this is what it looks like at the kind of towards the open of a session where everything gets really, really quick. And then as things start to move into the session, then they start to look like this, where they spread out a little bit here, because you can see that you're comparing currency strength now with currency strength X number of minutes ago. And as you move into the session, then you are really, really beautifully seeing what is being bought and what is being sold during that session. So what I would do is, let me see if I can find some tutorials just so you guys can see. I've got a bunch of these on YouTube, and I think then you guys can maybe get an idea of what's coming up. Let me find these super quick. Yeah, so you can just see really quickly what's being bought and what's being sold. Okay, searching. And so you could see here, I mean, would you want to be buying the American dollar? Absolutely not. You wouldn't want to touch it. You would want to wait for this thing to be up here. So you would actually be looking to sell the American dollar, Canadian dollar. If we have a quick look at that, this should have at least bleeding edge should be moving lower, and you can see it is. You can see how it really moved up. We're on the 4-hour chart. We're looking at minute data just previously. We're actually looking at the past 4 hours of trading, and so you can see very clearly that, I mean, this is a seller for sure. You can see how price is just kind of wriggling down for a long period of time. And now we got to the end of the day. We've gotten pretty close to the range. We're about 17 pips or so away from it, and now we're expecting price to maybe wriggle higher, at least on the near term. Let me see if I can find. Okay, here is the link. I'm just going to post this. Just got to get the link to it. This is the. So I create a long video. Things are a bit slow. Everything got a lot of number crunching going on in the background here. Here. I'll give you a couple. So here's one, and then I'll find one more. I don't know how, these are pretty old, these videos, so I'll find another one. I'm going to redo all of this stuff. Let's find the other one. The other one's just the trading robot. Okay, here. Okay, here we have another one. Let me post this one. Then you can see this explains what the indicator does. And it used to be a part of the member section, but it's pretty difficult to use because it just takes a lot of practice, and most people weren't willing to practice, and so I took it out. But I'll put it back with a disclaimer on it. But it's pretty amazing because you just watch. I mean, you watch this thing, and it does all the work for you. Oops. And you can just see very clearly, I mean, what's going on. I mean, yes, I mean, you want to be looking to position yourself along the CAD and short this. But if we do, on the other hand, we change this to the past hour, what's been going on in the past hour, say 60 minutes, look, I bet you these two are kind of changing. And you can see here that the Canadian dollar is actually selling off. And so now they're starting to pull in towards each other. You can see that earlier the dollar was here, and the Canadian dollar was kind of on the high side, but now things are changing. The sentiment is changing slightly, which is what we can see when we look at this chart, how things are slowly starting to turn around from here. Because this is the past 15 minutes. You go to the 1 minute chart, you'll see that it's wriggling. You can see how it's moving around, which is really clear when you look at when you look here like so. So anyway, that's pretty cool, really interesting. So check out those videos, and you can see if it's interesting. But they'll be coming out within the near future. I've been up to my eyeballs with all sorts of stuff, but it's on my to-do list. What time frame is it best for? Depends. You can use it for kind of anything. I prefer this stuff for the shorter term stuff. So if you want to trade the very small time frames, like the 1 minute, I mean, you'll find it'll really help. It'll help you filter trades if you trade based on stuff like this. So, but I have like a setup. Here, let me change focus. Okay, let me close. I'll just show you very quickly what it'll look like. Wow, there's a lot there. It looks like I just deleted all my charts. Oh, well, 1, 2, 3, 4, 5. You go like this, and this one will delete this indicator. We go here, then we put the strength indicator on that one, and we say we want this one to be, for example, 4 hours. We move this higher. And on this one, on this to be 1 hour. And the one below, we want to see the past 10 minutes. Or 15 minutes, 10 minutes. Look like that. We see this. So now you go like that. What's going on there? Anyway, so something's not right there. I think it's downloading, it's very busy, but you can see here that, I mean, this is just moving quickly. You're having like bleeding edge strength information here. And this is kind of the longer terms. This is showing what's gone on during the course of the day. And this is what's kind of the more here and the now, so the past 10 minutes. So it's super interesting and very, very powerful. And I think you'll like this once I get it reintroduced. But remember, the most important thing is supply and demand. This is just a crutch to help you align yourself more advantageously to demand. Also, I mean, I use it a lot for supply and demand. I normally use a dashboard, but the dashboard is simply, I'll wait for price to reach an area of supply and demand, and I'll wait. Is it going to hold? Yes or no? And then I'll wait for the strength information to show me that it is going to hold. Of course, when price is coming down, the area, sorry, you mean the one that you want to be buying is going to be really, really weak because it's approaching an area of demand. And so you look on this one here, and this is going to show you that the sentiment between the two currencies is going to start turning around, and then it should drift higher from there. So anyway, I don't want to get into the details of this, but that's coming. That's in the very near future. But check out those videos; they might be interesting. You kind of get a bit of a look. Cool. Well, I think I'll wrap things up for today. I hope you found the information today interesting, and we'll be doing this again every Thursday at 9 o'clock Central Eastern Time, because that's where my Rugrats are all in bed. Hey, thank you. Thanks so much for being here. But I thank you all so much for being here. This is of course recorded, and I will put it in the members section, and so you guys can check it all out at your leisure. Cool. And yeah, I hope is everyone here on River? I hope so. If yes, cool. If any of you aren't on River, please write to me and I'll get you on there. Hey Sandy, I sent you an email, an invitation, but if you want, you can. Let me have a quick look. Just want to make sure that you are admin. I can see if you are in here. Invited. Let's have a look. Yes, you are. Yeah, you're in here. I can see you joined today. So that's perfect. So you're in here. Smashing. Good. Okay, cool. I'll leave it at that. Thank you all so much for being here. Have a super day and sleep tight if you're ready to hit hay like I am. And I will catch you all tomorrow in the chat forum. Thanks everybody. Thanks for being here.